What's up guys, it's Michael here. In this video, I'm going to cover a very important topic that finally got released to the media. So Congress and a group of people in the higher ups, including the president, is now preparing a bill. This bill is very important, and hear me out, it is for the middle class and lower class. So what makes this so important? Because it finally promotes investing and saving money. For the first time within these 2 decades, they're actually decided to put out a bill. They think it's going to support the economy, support the people in the middle class, and help them out. Because, as you know, majority of the middle class is now either becoming now considered as lower class, and either a few majority of them are going to the upper class. There's not really a middle class anymore. So before I mention it, please click the like button down below and the subscribe button. And it is called a Saving and Investing Act. Yes, you can Google that right now. It's very important. So break down to 4 main topics, and let's keep this brief. And I suggest you guys to go take a look and support that bill, and hopefully it passes. So as I mentioned on my videos before, I released a video talking about capital gains tax. So this directly affects capital gains. There are short-term and long-term. To keep it brief, that short-term is the most unbeneficial one, meaning within less than 1 year, if you sell any investments you have, you get taxed over that bracket. That bracket is is to take money off of you. For a long term, this is the one that most people should attempt to target, which is you sell anything yearly or longer, it's considered a long-term capital gains tax. And within here, there are 3 major brackets. There's 0%, 15%, and 20%. 20% affecting people investing and making more than $450,000 a year. And 15% is somewhere in the middle, I don't remember correctly. And 0% used to be around $40,000. And depending if you're married or filing jointly or file as a married couple, it can go between $40,000 to $80,000 if you're filing as a joint couple. So what makes this bill very important for the middle class and a good promotion is they take that number for the 0%, which is if you're filing jointly, it's $40,000, married couple, $80,000. So every per person is about 40 grand. You take that number and you multiply it by 2. By 2 for investing, for a long-term capital gains tax. This is perfect for a majority of the people. So whoever it is making a amount of money and invest money, if they take, like a single person makes $80,000 a year in investments, for example, this includes all types of investments that is not directly related to your job. So you're looking at real estate, making you money. Really important one. You can look at interest rates, stocks, and bonds. Let's say a dividend stock. They pay you approximately $300 a year for owning their stock. Imagine you bought a ton of their stocks and you're making $40,000 a year. Now you can increase that to $80,000 a year and pay nothing, 0% in capital gains tax. Because as long as you sell it or they pay you out, it's past 1 year, it's considered long-term capital gains tax. You do not get tax rate. You get the complete 80 grand, which is insane. Now, if you're filing as a joint couple, meaning married, you take that $80,000, you multiply that by 2. So instead of 40, it becomes times 2, $80,000 per person, which is insane. It's a lot of money that you can finally keep. And a lot of people are not investing. This is the perfect time. That's why the bill is called Saving and Investing Act. Right now, it's being proposed, has been approved yet, but if it does approve, the government, as I mentioned in this channel, they're always there to make money. So there's how they're gonna make the money back. They make the money back by clicking the like button down below. But now, in seriousness, there's actually an article in a bill that was passed. It was called the SALT Deduction, meaning the SALT Deduction is where the state and local governments have a bill that was passed during the Trump administration. It was supposed to end around, I believe, 2025. So that is, you can take your property tax, anything with tax that's not itemized, that you can deduct up to 10 grand. I believe, actually, never mind. It has to be itemized. They could be deduct up to $10,000. So the proposed bill on that is anything that is cost more than $10,000 that are itemized cannot be deducted if it's over $10,000. So people are trying to repeal that. I believe the Democratic Party was appeal and change it to $80,000. But at the same time, now they're trying to extend it because if the Saving and Investing Act passes, then they're gonna lose a lot of investment money that people make over that percentage. Like people making over $40,000 a year investments and now not gonna be taxed. But put it this way, if they're gonna increase and extend the deadline for the SALT deduction, where people cannot deduct more than 10 grand for itemized deductions. It doesn't matter because the Saving and Investing Act, you think about it, you're taking $40,000 a year versus your 10 grand you can deduct. You're keeping literally times 2. Instead of $40,000 you get tax free, now it can be 80 grand per person. The benefits is still way greater than even extending the SALT deductions. So I suggest you take a look at that bill. And based on my understanding, for the Savings and Investment Act, it covers 0% capital gains, which is what I just mentioned. It covers anything where investments. So you look at interest, dividend stocks, real estate, anything that make money that doesn't require you to spend your time on over the period of time. So you spend time in the beginning to put your money in and let your money work for you. That's the part where it's considered capital gains tax free. You look at net investment tax, so meaning for more wealthy people making more money, they're planning to increase that cap from, I believe, like $250,000 a year to $400,000 a year. So your net investment tax is going to be raised. So basically, it benefits the lower class, the middle class, and the upper class, not the super wealthy. The super wealthy, they have their own group. And of course, you have the last one, the savers credit. They're going to encourage people, like you see in the Nordic states, where you have like investment account, a 401k. So they're trying to encourage people to invest in that. So for that one, personally, if your company job gives it to you, then take it. If it doesn't give it to you, then I suggest you don't put in money yourself. You can put it elsewhere to make you more money. So please like, share, and subscribe, and also take a look at the Saving and Investment Act. This bill is very important, and if it gets passed, it's going to be a major game changer for the middle class. So see you guys next time. Peace.